Hey, how's it going? I think I'm the last one. Am I the last one in?
Say the best for last.
Yeah, exactly. Everyone's gone. There's no one here. Anyway, thank you very much. I see there is a few people here. I'm only joking. So, if we go a tiny bit over, sometimes being the last one gets you that little privilege, I guess. But anyway, can first of all, if I could just see you guys, can you hear me? Is the thing. So if you give me a wave in the chat box, then because I kind of like a lot of interactive, I kind of like to know I'm not talking to myself the whole time. So that's kind of nice. Okay, lots of waving there. As you can see, you might be able to see me on the camera as well. That's all cool. If you want to look at a little bit of me and a little bit of the screen, that's also very good. But it's great to be here. It's a beautiful sunny day here in London. Would you believe it? It's quite warm for a February day. But what I'm here to teach you about today is how to master earnings with the only independently verified system for private traders. I'm going to talk to you a little bit about that and show you exactly how I do it and my members do it too. Now, so many people have been talking about the blockchain recently, and I consider the blockchain and crypto to be unanalyzable, because what I have to do in order to satisfy my needs for trading is to be able to measure and test and prove a concept before I'm going to trade it. Otherwise, I'm really going to only be trading an anomaly. So forget about the blockchain. It's the option chain, which is the secret code to the stock market and to your success. So blockchain is basically chaos, which some people make money on, some people won't, but no one's going to know for quite a while. But the option chain means order, means predictability, means you can create a system out of it, means you can create consistent revenues from it. And that's what I'm interested in, because I don't want chaos. So what do you really want as a trader? Well, I'm assuming you want more money, like me, and I'm assuming you want more time to enjoy it, like me, and that's what I deliver to myself and to other traders all over the world for the last 12 and more years. So if that sounds good, just give me a few waves just to say that is what you would like to achieve, because that's exactly what I'm going to deliver you right today. So where are you right now? Well, when I speak to a lot of traders who haven't met me before, many of them are unsure of how to trade these 2019, 2018, and 19 markets. 2017 was dead simple, slightly more tricky. 2018, 2019 is going to follow the same suit as 2018, as we'll see in pretty short order. Concerned that you might not be as consistent as you want to be, and therefore not as confident as you'd like to be. Maybe some of you are less experienced and just really want to know how to get started, or you are experienced but maybe confused, frustrated, not quite sure which foot to put forward. Either which way, you're exchanging time for money, and that's no good either, because typically you have too much time for too little money. So what you really want to be, again, talking to many traders, is they want to be consistently better and without staring at screens. What I do is I do not stare at my screens, as you will see, and that's going to give you confidence. Because when you're confident, then you're not desperate. And when you're not desperate, you know what to do in specific market conditions where you hold the edge. And I'm going to show you exactly how you will hold an edge. And that gives you the choice of when to trade and where to trade. And that's fun when you can do it on the beach or choose not to do it on the beach. It doesn't really matter. Or even skiing, like I just did a couple of weeks ago. But the idea is stress-free trading and more time to enjoy yourself as well. So here's what we're going to cover today. We're going to cover the weaknesses that most home-based trader systems have that no one is ever going to tell you about, why earnings is so powerful. I mean, just quick yes or no. We all know that earnings is a catalyst for great stock movement. Do we not know that? Okay. Give me a quick wave on that one. Earnings is a huge catalyst, so we want to know how to take advantage of that. What the big players are doing, how they might hide their activities, and how we might be able to spy on those activities. I'm going to show you exactly how that happens in a way that no one else does. And I will then show you my 5-step system for mastering this and my 4-step trading plan that we use for every strategy. Now, if you have one plan for every strategy, that's going to make each strategy you learn quite easy. And we're going to explore just one specific strategy right now and today. We'll show you trades that are past and present, and also how to get started right now with an irresistible and risk-free offer at the end as well. So actionable content for you today. I'm going to reveal the truth about why prices move, and it's got nothing to do with the planets, I can assure you, and things like that, nothing to do with magical numbers. We're pretty scientific about the way we do things. Everything must follow a logic, and I will show you exactly what that is. I'm going to simplify your trading for you, because if it's complex, you won't do it. So simplicity is good. If we can do the complex stuff in the background, that's far better. That's going to help improve your consistency. That's going to help generate your confidence, put the odds in your favor, save you a huge amount of time, and we're going to do it by specializing at earnings for big moves, but safely. Because you know what? I'm kind of a wussy, and I like to do things in a safe way as well. So we're not talking about taking silly risks. Now, in my trading environment, have 3 earning strategies that I've specialized in. One is straddles, which is based on volatility. We're not going to cover that today. My other one, which is a bit more aggressive, is a pre-earning strategy, which is a bit of fun, but really, really cool. And you might have noticed that this particular earnings season has been rock and roll. I'll show you a few trades we were on that one. But the one I'm going to focus on is my post-earnings strategy. And the reason I'm going to cover this particular strategy today is because it is what any trader anywhere should be doing this strategy, and you'll see exactly why and how as well. Now, one problem with most trading systems is that they're confusing, and confusing is bad for your trading. Confusion's bad. You're never going to get anywhere. You're going to go around in circles at best. So I stick to one trading plan for all strategies. So just give me a wave if that might sound useful for you, to have one plan that you can use for all strategies, all times, because that's going to reduce all that confusion for you. So that's what I have. I'll show you exactly what it is today. Another problem with most trading systems is they're based on, I'm sure you understand, I'm sure you've seen it before, combinations of patterns and indicators. Here's the truth. A pattern or an indicator is meaningless unless there is a logical story behind it. Otherwise, it's just a pretty little pattern. So when you combine, one pattern is meaningless enough. When you combine lots of meaningless patterns together, it's even worse, because then it leads to something called overfitting. Now, I'll talk to you about overfitting. Overfitting is where you have an overly complex model to explain idiosyncrasies and anomalies in the data, something not many people talk about, but this is an institutional thing. So here's the thing. Let's just say you go to a beautiful concert theater, and you're hearing a beautiful orchestra play, and you want to remember that experience for the rest of your life. You bring in the world's most powerful microphone, and you're sitting in the stalls there in the best seats, and there you are with your microphone. And when you go home that night, you listen to it again, you go, wow, that's amazing. This recording is perfect. Except for then you start hearing the people rustling their popcorn behind you, someone sneezing, someone coughing, someone chit-chatting to their partner right behind you as well. Now, what's the point of all that? Well, you went there to record data, the data being the music, the orchestra. That was the meaningful data that you wanted to capture. But what you ended up capturing, because you captured all the data, was all the noise that isn't relevant. And here's the point. Most trading systems, particularly when it comes to Forex and other things that are not stocks and options, but particularly Forex and other things, they measure things that are noise, and they try to make sense out of noise. So at 7 minutes past 11 a.m., if this one thing happens, then you can make money. It's an anomaly, and anomalies come and go without any warning. And that's not what we want to trade. We do not want to trade anomalies. We want to trade a phenomenon. So each trading system has an end goal, obviously, to make money. Some data is helpful, but some is not. And many systems and methods out there are actually analyzing or measuring data that is actually just noise. Now, another phenomenon of overfitting is too many parameters. So have you ever seen a system that had like 8 different things that had to come together in order for you to do something? Just yes or no. Just give me a little wave in there. Have you seen that one where it literally scribbles all over a chart? Real confusion. Overfitting. Overfitting won't work in the real world. Works nicely on tested data, doesn't work very well on non-tested data. And the other part of it is too many parameters and also too little data. Some people are measuring their system based on, a year's data, or I mean, you need a ton of data to be able to really properly analyze a system. So with nearly every system that the home-based trader like you and like me will see, will therefore end up merely memorizing the training data. No good, because it performs brilliantly on that, not very well on new, unexplored data. On top of all this, here's another truth. Most patterns, most indicators, and when I say most, the vast majority, have losing probabilities due to a concept known as confirmation bias. Now, what's confirmation bias? Well, confirmation bias is where you favor information that confirms a pre-existing belief or bias while it ignores data that disproves those biases. Now, I might upset a few of you here, but let's go for it, hey? I'm going to upset you. Let's talk about Fibonacci, Gann, Elliott, the magical number theories, which I wasted about 3 to 4 years of my life on. That's all about confirmation bias, because people will pick on the one time that broken clock was right, the one time it hit the 382 or the 618, or dare I say it, the 786 or the 886 and all those other ratios. The one time, and it'll ignore all the other times. Confirmation bias will get you into a whole heap of trouble. However, here's the real thing. If there is logic behind the setup, then what we do, in my world at least, we use the pattern or the indicator, not because the pattern or the indicator is so amazing, because they're not. What we end up doing is instead we use it to manage risk. And that's the key, because when you have a logical based system with probabilities on your side, then the art is how to manage risk. Yes or no? Just give me a quick yes or no, everyone. Does that make sense before we get into this? Because now you're going to understand why I do what I do, how I do what I do, and it's all based on data. Don't worry, you don't have to worry about the data. I've done all that. But here's the point. There must be a why behind the pattern. Otherwise, it is just a pretty pattern. And our why, my why in trading, is demand and supply, but not of any old thing, but of leveraged activity. And I'll tell you why as we go along. So it's also vital that you trade a system, but remember that you are an individual. So a system has to be slightly adapted, or you have to adapt to it. Now, trade earnings is often a time where people get a little bit scared and a little bit wary, a little bit nervous, but for us, it's actually a huge opportunity. And my traders have reported time and time again average win rates of 7 out of 10, and enormous success. You'll see a bit of that as we go along as well. Now, why do I focus on stocks and nothing else? Stocks or stock options, but the underlying would have to be stocks. Well, they're the only financial instrument that can confer a repeatable and measurable edge for private investors. Why does Warren Buffett, Carl Icahn, William O'Neill, why do they do what they do with stocks? Because they can repeat their edge over time. If you have the right source of information, then stocks can be robust, they can be reliable, and ultimately more predictable, which is why we want to do it. So insight number one, I'm going to give you a few insights tonight, maybe write them down. Stick with stocks and stock options. It's going to save you a whole heap of trouble. That's, again, in my world, this is what I do. Why earnings? Well, when companies surprise, so they might have a gap up, they get noticed. Now, they get noticed on a bullish point of view and a bearish point of view. But when the companies make a surprise and there was a gap, then they get noticed by big institutions and by big individual players and hedge funds, etc. Now, if the story behind this surprise becomes compelling, then the large investors will look to take positions. But there's a slight problem. They can't make all their positions in one hit, can they? Because if they did, they would disturb the underlying price. So let's just say the price is 50. Let's just write this down. You got a price of 50, and suddenly it pops up. You get an earnings pop to, I don't know, call it 55. That's 10% pop there. Then if everyone says this looks great and starts piling in on the underlying immediately, then that price is going to go to 60, 70, etc. And what happens is they're going to be fighting their own self in order to get in, and they're going to be forcing the price up. Now, they don't want to force the price up, so what they have to do is they have to go in stages. That's why you end up getting setups like this, moves up and then sideways, flag pattern type things. Now that's good for us because we can take advantage of it. So they can't get it all in at once. One, because they can't make the decision to do it, but two, because they don't want to disturb the price. They want to get in at the lowest possible price, even while the stock is rising. But there's a solution that some of the more aggressive ones will go for, and that is they go into the options market. And this options activity is largely hidden from view because people don't know exactly what's going on there. And this is the information that I look at. This is the information that I specialize in. And this means that I have in my database about 13 billion rows of data that we analyze, obviously from a historical point of view, but for every single day to see where leverage is going. And it's not as straightforward as volume and open interest and all that. There's a whole heap more information that goes into all that. But just give me a wave if that makes sense. If we say we're looking at the demand and supply of leveraged activity, the risk-taking activity, this is going to give you an edge, and no one else has the data and no one else does this, not in our way anyway. So with the right source of information, earnings can be enormously lucrative, and I'm going to show you about that. And it's great fun too. That's the other part of it. A lot of trading can be a little bit dull. This is fun. All right, so would it be useful to see that option sentiment, that leverage sentiment around earnings? Yes or no? Just give me a wave on that one. Give me a bit of enthusiasm, make it worthwhile. There you go. All right, would it be useful? Yes, it would, because here's the point. Leverage means greater risk, but it also means greater returns, greater rewards, right? Why would these people be putting themselves subject to greater risk? Because they think they're going to win, because they got the information, right? So knowing when is essential. So it's not only important to know when earnings is happening, but it's also important to know when a particular earnings strategy becomes active. I actually have this earnings calendar. This is the 2019 one, and it shows me the yellow highlights where earnings is happening, and those little dots are different earnings strategies I have at different times. So I always know exactly when I can activate a particular strategy. You'd be surprised also how many weeks of the year you can actually trade these strategies, not just like a couple of weeks here and there. They actually can go on for quite some time. But if you miss out on it, it will cost you thousands, because earnings is our lucrative time of year. And I'm going to show you a whole bunch of stuff tonight that's you're going to like. Okay, so here's another statistic. There is an enormous amount of traders who are reputed to be losing at trading, and I don't know where these statistics come from, but they come from somewhere, obviously. However, in our surveys of our people trading earnings, 70% of those trading my directional earnings strategy, that excludes the straddles, because they just wanted to focus on this particular thing, they are consistently winning on average 7 out of 10 winning trades as well. So for the right person, if they think this might be interesting to you, this could just be the thing you're looking for. Now, these are just normal people. Here's Kyle on the left. He's got an 82% win rate. He's made 18,000, not a huge amount, but he's only trading $800 per trade. And this is in 9 months. Now, here's what happened with him. This is a really interesting guy. He's in his 70s now. He was trading for 12 years before he came across me, and slowly got into it. And he traded 2 systems at the same time. His existing system, where he was losing, well, making a 30% win rate. So his win rate was 3 out of 10, not very good. And at the same time, he then traded my system, about 40 trades on each. So, and he on that one did an 82% win rate. So that's pretty good. On my system, he made 18,000. On the other system, he lost 13,500. So he's become a convert, it could be said, after 12 years. And I'll show you what he said a little later. Chloe's in Kuala Lumpur. She's actually in her 20s. Couldn't get more different avatars, could you? And Chloe was having a 40% win rate before she traded this way. Now is 7 out of 10, has more than tripled her account in just a few months, really turning it around. This is the kind of turnaround that we can have. And these are other people I'll tell you about another time. There's Abe here, $10,000 into $140,000. Kate in Fresno, $50,000 last year. Roger, $450,000 in profits and counting. Kedzie over $200,000. Brian over $200,000 in Oregon, and Sheldon and his son. You get the picture. This can really change things, and these people all become my buddies as well, which is also very nice. So I'm going to teach you something, or a number of things today, which is going to culminate in this plan and how to do it. So it's called the 5T trading system, and there are 5. What I've realized over many years is 5 components to how you are going to become the trader that you want to be, and in my world, not staring at your screens. So The first T is for training, and there's 5 ways you can train. You can read books, you can attend a live webinar like this, you can look at recorded training sessions, you can go to a live event, or you can get personal mentorships as well. So there's 5 areas of that. Now, in my world, what are you actually training in? Well, you're training in specifically my 4-step trading plan. And this is something that is vitally important. So you might want to get writing now. If you haven't yet, get writing, because this is the beginning of everything. So my trading template has 4 sections to it, 4 parts to it: E, D, G, E. Now, obviously, you know that spells edge, which means advantage. And this is the plan that's made millions and millions of dollars around the world for over various accounts. And every strategy I do, doesn't matter what it is, stocks and options, must conform to this 4-step trading template. This template alone is going to provide you with enormous amount of value in the next 45 minutes. So let's have a look and see what each part is. Well, the first E stands for entry. Now, that's the first part of your trade. Now, getting your entry right is all about being in control of the trade. Just yes or no? Just give me a wave if that makes sense. Being in control of your trade right from the very beginning. Because if you're not in control of the trade, you went in on a guess or a whim or some other kind of weird, fanciful idea, then if you're not in control from the very beginning, you're very unlikely to regain control through the end. So I have three areas for that. And again, write this down because this is it. Then we're going to use this plan specifically for an earnings strategy. It's very important that you pick this up. So the first thing is the setup's got to be right, or the pattern. The second thing that's got to happen is that the stock must break out. That's your prompt. If it doesn't break out, you have no business being in the trade. You want it to break out in the direction which you want to trade it. And the third one is then protecting, having an initial stop. Okay, just give me waves intermittently if this makes sense. So let's have a look at an example. This is one of my favorite ones with Apple. Again, it was after earnings. You can see that from the earnings bell. We had an up move, a sideways move. We have this thing, which I'm going to teach you about a little later, my OVI indicator. This was showing me that leverage was strong and positive. That's what the thick blue line means. It was doing it before earnings. It got that right, but it was doing it after earnings, and this is my setup. It had popped at earnings, popped up, then it had gone sideways. The leverage was still really strong and positive, and so the next breakout was going to be something I could do. So there was the setup. So we got the pattern. There's the prompt, i.e. the breakout, and then here is my protection. Just give me a wave if that makes sense. So the pattern, the prompt, the protect. All there, everything was there in place. So that's getting the entry right. Now you're in control. The D part is all about defending your profit. And what the key part of this is this. And who's had the problem? And I want a whole load of hands on this one. Who's had the problem of they allowed a decent profit to turn into a loss? Wave your hand at me vigorously, enthusiastically, because let's face it, we've all done it, okay? And some of us, or some of you, might continue to do that, okay? It is so annoying, it is debilitating, it hurts your confidence, and it hurts your account as well. So I have a system within a system that helps you to secure your profit early. That's not the end of the story, by the way. Help you secure your profit early. So what that means is we are going to make sure that a decent profit does not turn into a loss. Who thinks that might be helpful even right now before you know anything else? How to protect a profit, prevent it from turning into a loss. So for that, we set a very modest initial first profit target. We then will adjust our stop once that target is hit so that now we can't lose. And then we might, as part of that, actually bank some profit. There are 3 different options we can take on that one in order to make sure that a profit does not turn into a loss. So let's have a little look. Here's the Apple trade again. And what's going to happen is we're going to set a modest profit target. I won't tell you exactly how that is, but here's the modest profit target here from just over 130 to just under 135. And at that point in time, we are going to secure a profit. We're going to raise our stop accordingly. So even if the stock did come down at this point, even if it did, this is one way of doing it. Even the stock went there and then comes down, we've got a scratch trade, but not a losing trade. Now, if we'd taken some profit off the table by then we've actually got a guaranteed profit. So there are 3 different ways of doing that. But the concept is, do not allow a profit to turn into a loss. It's a crazy thing to do. And it's very damaging to, not just your account, but your psychology and all these other things. But that's not the end of the story, because the other part that people do so often, and by the way, guilty as charged, I've done it too, and this is why I came up with a method to stop that, is they get out too early. Who's got out of a trade, all of it, too early just because they felt that 5 or 10% was probably okay? Who's done that? And then the whole thing went racing up by 50, 60, 70, 100% and left you behind. Who had that? Well, let's face it, we've all done that before, because if we've gone through our, trading sort of punishment, if you like, that's what's happened to all of us. So there has to also be a mechanism to keep us in the trade if it's going to go off and up with it, if it's going to keep on going. Now, we don't know. We don't have hindsight. So we have to have a mechanism that's going to keep us in there if that's going to happen. So I have this mechanism that's staying for windfall. Okay, now what this means is this. We are going to shadow the stock as it rises in our favor. This is on the bullish trade, of course. We're going to shadow it. If it rises, we're going to shadow it. We're going to adjust our stop along the way. Then we're going to make an exit, and that's what gives us our yield. So it's kind of like my call the easy windfall escalator. Let me show you how it works. Here's one with Home Depot. Home Depot created a setup that we liked. So it broke out, and then what's going to happen is, as it starts to make meaningful new highs, I'm going to follow it along. If it's not making meaningful highs, I'm going to keep my stop in place. And it kind of looks like a bit of a ladder. So again, now you can't do it until after the event. The price has to do something. So you see a lot of people, they do a trading plan based on some diagonal line. Well, that's not going to work, because you're assuming that you know what's going to happen before it happens. No good. So we have to shadow, we have to see what the price does first, and then we make a decision accordingly of, are we going to raise our stop or are we not? Now, typically, we're going to raise it as it rises to just below a previous high or just below a previous low. But at this point here, we are already in a no-lose situation. Yes or no? Give me a wave. We're already in a no-lose situation, aren't we? Unless the whole thing tanks, overnight, but it's not going to. Not when this is going on underneath, when leverage is all positive and we've already broken out and we're past earnings, etc. It's not going to happen unless there's a massive sort of cataclysmic event in the markets. So we shadow it, and then when it starts making a good new high, then we're going to tuck our stop behind a previous low or a previous high as well. Give it a bit of room, let it breathe, let it keep going in your favor. And eventually you're going to get stopped out. You're not going to get the high, you're not going to get the low, but we're not going to. Now, this was a 22% move in Home Depot, simple OVI trade, and that turned into 118% on deep in the money options. Deep in the money, not at the money, not out the money. Deep in the money, much safer, much better. That's a whole different story, but that's the kind of thing we're doing. And so these guys here, they're playing for that leverage. Okay, so $2,500 turns into $5,500 in a real trade. Now, I am going to teach you the post-earning strategy in a few moments, but we need to get the trading plan right first. So don't worry, I am doing that. We're getting there, but we're building the blocks. So we've done entry to be in control. We've defended our profit to make sure that a winner does not turn into a loser, but we've also engineered a way that if it's going to trend, we're going to be on that trend, okay, for the windfall. The last piece is about evidence. If you don't trade a properly researched, tested, proven, evidenced, empirically proven system and method, then you're trading an anomaly. And if you're trading an anomaly, your odds are either not even calculable or they're going to be low. And you're going to start losing things when you don't know when. And if you ever heard someone go, oh, that should have been a winner. Well, there's no should about it. The market's right all the time. Now, if you don't trade logic, you don't trade something tested, you don't know. You're gambling. So what you need is to be trading something that is logically based, is testable, because things like Fibonacci isn't actually testable, and proven. So that's when you know you're getting serious. And for that, you need a ton of data. I mean, and I have billions of rows of data. You need to be able to clean that data, organize that data, arrange that data so it can be tested and also authenticated, preferably independently as well. So hopefully that makes sense. Now, what do I do for that? Well, I have the OVI, which measures options transaction data, and we've made that into something that can work with indices and with stocks. Again, we're only talking about stock indices as well. And this has been tested by independent hedge fund analysts, and it works at stock levels, at index levels. And I'll give you a quote, actually. This is from independent hedge fund analysts. Using institutional standards of financial modeling, the OVI, the options volatility indicator, stands up to rigorous scrutiny as a valuable, logical, and robust indicator. Robust means it can weather storms and unpredictable events. The OVI, and it's also constructed in a robust, logical way from a mathematical point of view. The OVI is highly valuable in predicting broad market sentiment, i.e. indices, and identifying stocks, individual stocks, that subsequently perform. I'm going to show you a lot about that. And then there's so many stories, so many anecdotes, so many testimonials of people changing their lives, changing their trading profiles around with all this. So a little bit about me, because some of you might not even heard about me. I'm sure I don't think you have, actually. I don't recognize any names here. But why would you want to listen to me? Well, I started trading back in 1992. I was 21 years old, and my first trade was in this thing, Wembley Stadium. Now, if you know UK sports, Wembley Stadium is the home of soccer. It's where the England team plays, all the big finals play. You know, it used to have a capacity of about 100,000. It's about 90,000 now. So I make my first foray into shares. What could possibly go wrong? Loads of people come to this place. Well, it was a trade based on a cardinal sin, which is opinion. And opinion can destroy trading accounts. Yes or no? Give me a wave on that one. Who has traded with an opinion and got it wrong? Okay, I'll give you an example just recently. I've just been having a laugh about it with my members. eBay. Now, my opinion of eBay is that surely it's getting swallowed up by Amazon. Amazon, people put their shopping sort of shops online on Amazon now. Surely eBay must be getting killed. It isn't. If you look at what's going on with the price, and I'll show you that in a few minutes. So opinion would have made me want to short eBay, but logic and reason and looking at facts would have me going bullish on it, and I'll show you that a little bit later. So opinions destroy trading accounts. Do not trade based on opinions. Insight number 2. Now, a few years after that, because I was really interested in stock market, I got qualified in my exams in the city. And what happened, a long story short, I ended up taking a finance MBA in the heart of London at Cass Business School. Now, this is a finance-orientated institution. And what was interesting about that, actually 2 interesting things about that. I recently went and had a look at how much that would cost me to do today. It cost me £10,500 at the time, about $15,000 with the exchange rate at the time. That would cost today, that does cost $57,000 for 1 year. So Harvard is 150 grand for 2 years. This is, pro rata, just under 120 grand. You pay an extra premium for the Harvard one. Now, what was interesting about that was these guys here. I want to show you these guys. This guy here is called Gordon Gemmell. He was my nerdy professor of options. Real nerdy guy, never made any money, but he was real academic stuff. Obviously knew his stuff, but from an academic point of view. This guy here is called Dr. Kevin Connolly. Now, he was a visiting professor, and he made tons of money, millions of dollars, with James Capel, Goldman Sachs, and other entities that he went and worked for in the city and in Wall Street. And you couldn't have found 2 more different characters, but they were both my mentors, if you like. But there's one thing they agreed upon, even though they had totally different approaches, albeit that they would talk about the same thing. Here's this. They said, if you want to make money in stocks, ... which I'm sure you do, and I certainly wanted to, is find out what the options traders are doing. Now, that's a loaded comment, because this guy was something of an insider, not an illegal insider, but he was kind of inside the spread, as it were, working at these institutions, right? Okay, and made his millions trading volatility. This guy was not an insider, didn't make the money, but they both had the same conclusion. The options traders are there first. Yes or no? Who's kind of empathizes with that one? Just give me a little wave on that one. The derivatives traders are always ahead of the game. That's why they always get the blame for things when things go wrong. But they are, and I'll tell you how in a minute. So I kind of made a bit of a meal of that myself. I thought that's something that I want to do. But the difficulty of that is, of course, how the heck do you get the data? How the heck do you read the data? It's not as simple as just doing, oh, volume or open interest like other people do. It just isn't that simple. So what's going on with that? So that kind of became my life's mission. Now, from about 2000 onwards, I started to get in the real successes. And the way I was doing it was I was literally spending many hours every day poring around options, option chains. And it was really, really, really difficult. But I was young then. I had the energy and the drive to do all that kind of stuff and be that much of a nerd. And there was one time where we went to, sorry, I pressed the wrong button there. There was one time we went to South Africa with a group of reprobate friends of mine. And in that holiday, I turned $14,000 into $50,000 in just 10 days. And they literally were throwing money at me to trade. It was by the pool, by a dial-up connection, would you believe? A really amazing thing. But I was doing this, not much of a holiday. But my problem was, did I have a proper system? I couldn't help but think. Now, the point was I made a ton of money, made 7 figures, including a run of 1,400% in 6 months. And my account went from $14,000 one month, then to 31, then to 107, 128, 187, 143. And there's something, 143, then 187. And there was more. That was just one account. So insight number 3, though, was this. A proper system has got to be repeatable. It's got to be robust, based in logic, and it's got to be transferable. Because if it's not transferable, it's not a system. If I can't repeat it, it's not a system. It's just luck, okay? Now, the problem was with the old system that I was using, or the old method I was using, was it was very laborious. And so I got seduced into this magical numbers world of, dare I say it, Fibonacci, Gann, Elliott, all the things that seem very, very plausible, seem very, very seductive, and seem amazing. The fact you could pick a high and pick a low, how amazing is that? Wow, I want to do that. And it's going to take you no time to do. Wow, fantastic. I want to do that too. The problem is, the search for perfection, getting highs and lows, is futile, number one. Secondly, it requires this, hindsight, and you don't have it in trading. You cannot pick a high in advance. You cannot pick a low in advance. You cannot pick the date in advance. You can't pick the diagonal line in advance. You can't do any of that. It doesn't work, okay? I promise you. I'm very scholarly the way I do things. I spent 3 or 4 years on that stuff. Doesn't work. So here's insight number 4. There must be a logical reason why any pattern exists in order for that pattern to be a viable signal. Otherwise, it's confirmation bias. Otherwise, it's a pretty pattern. Please take this to heart, if nothing else, because I will save you a ton of time in this and a ton of frustration on all this. So that was my big problem there. Now, the aha moment came in 2006 when this guy, Abe, in Virginia, wrote to me. He turned $10,000 into $140,000. Here's what he wrote. He doesn't speak English as his first language, but here's what he wrote. Dear Cohen, it's a strange greeting, and it was on Sunday. That was Sunday, the 26th of February. I hope you're doing fine. I bought Costco, made 84% profit. I also trade MTG Investments. Your pattern made 175% profit. You're the best teacher nowadays in the market. Truly, you're my guru, and I learned a lot about your book. Now, obviously, translation issue here, but this was the book. It was Options Made Easy. It was first edition, that one, well, actually pre-first edition, and he was using that method, spending hours and hours and hours every day doing the same thing and trying to figure out from those option chains. Very laborious, very difficult, and I shamedly had stopped doing that because I'd gone into down this rabbit hole of the magical number thing, trying to take a shortcut, trying to get seduced by this other world. Now, insight number 5 is this. If something is too laborious, then most people won't bother to do it. So it must be easy to do. Otherwise, we're all human at the end of the day. So here was the inspiration. Here was Abe doing phenomenally well, using my method. And I thought, well, look, there must be another way. There must be a way of doing what I was doing that made me all this money in the first place, but I can do it a little more quickly. So I figured out, well, how about automating it? So I hired a research quant to help me speed up the method, automate the method, take the time away so I could do it. Now, here's the thing. At heart, I'm just a nerd, just maybe a bit crazy sometimes, but this is what nerds do. Nerds make fortunes for themselves and for other people. And that's fun. So during those years, 2006, 2008, we were testing like fury, verifying, testing again, etc. And eventually we get some success. What I eventually did was turn an option chain like this, but many more of them, into this. Now this is a line that goes up and down between -1 and +1. If it's in the negative area persistently, then it's bearish. If it's in the positive area persistently, then it's bullish. And this line is the options volatility indicator, or OVI. It's only me who has it, and it reveals what the high stakes pros are doing. And it gives us an advantage by being able to follow them. Now this, for each stock, is a heck of a lot easier than pouring through hundreds and hundreds of option chains on a daily basis and trying to remember what's happening from one day to the next. And it's obviously a bit more slick than that too, because the option chain is a little crude. So let's give you a little test. Here is Baidu a little while back, but it's just a little test here. Now you know what the mine is. Just give me a shout out in the chat box. And I'm going to try and have a look and see what you guys say. So get ready to throw in. What's happening here in this part of the chart? Just give me a little wave. What's happening here? Bullish or bearish? We do not see charts. Please help. Okay, go show us. I'm seeing people say, okay. Well, in the first half of the chart, the OVI is persistently negative. So it follows that it's more likely to be bearish. And in the second half, it's positive. So it's more likely to be bullish. And that's exactly what happens. Now, that does not give you a trading system, but what it does do, it gives you a basis for direction. Some people can't see, some people can see, but hopefully most people can. So it gives you the basis of direction. That's a good start, and it's based on logic, and it's a bit like the weather. You see, when you get the weather forecast, what you get is this beautiful diagram of your map of your country in little sections saying what the temperature is going to be, what the cloud cover is going to be, what the precipitation is going to be, the probabilities and all this. But actually what's fueling all that is this: loads and loads of raw data that has been analyzed over time, and they have probability studies of what is most likely to happen. Now, of course, it's not an exercise in perfection. There is no such thing as perfection when it comes to predictability. However, it's a really good idea. We take it for granted. In fact, we have confirmation bias the other way. We only notice when they get it wrong. We don't notice when the weather people get it right, which is pretty much 90+%. So we're using high probability, usable information, and that's exactly what I do. I take the raw data of the option chains, billions of rows of it, and I create something that's high probability and usable from your point of view. Now, in terms of the story, what happened? Well, this is what happened. Bear Stearns happened. March 2008, Bear Stearns falls by 90% in just a couple of days, a couple of weeks rather. However, here's the deal. We were onto this, and we saw this with the fledgling indicator that turned bearish here. 2 weeks. 2 weeks it turns and stays bearish before that whole thing happens. Okay, and this is, while it's still in the 70s, right? So the OVI line, it wasn't even called the OVI in those days, it was called nothing, it was just a research experiment, was showing that certain traders had turned very bearish on Bear Stearns and other financial stocks for that matter. And so by looking at the weatherman, because let's face it, if the weatherman walks out in a pair of Speedos, you think it's going to be hot and sunny that day. If he goes out with an umbrella, then you think it might be raining. Well, he was walking out with the umbrella because we can see him here. That's the weatherman. And this is what happens. Now, this fella wasn't a weatherman and wasn't listening to the weatherman because he said the Bear Stearns were looking good at the time, and he got that wrong. I'm just giving him a hard time, really. But the point is, this is what happened. And these guys here are the leverage guys. They got it right if you followed them. And there's a way of following them. It's very safe. It's very safe. So those option traders made a fortune, which means ultimately that my MBA professors, my mentors, they were right. If I can follow options traders, I got one heck of a great chance in this. So that was that. So insight number 7, the leverage money knew ahead of time that Bear Stearns was going down. These professors, these mentors, they were right. If you could figure it out, you could potentially make some pretty decent returns. Now with Bear Stearns, it actually went down by 95%, but these guys down here weren't playing for 95%. They got a 10 bagger. in 2 weeks. Okay, 10 bagger in 2 weeks during that time. So here's the point, and then we're going to get on to the method very soon. The point is that smart, knowledgeable traders with good information will risk more in order to make more, because they think they're going to make more, because they're confident in their great information. And they do this by using the leverage of options. Because let's face it, if you think you're onto something, do you want a one-to-one return, or do you want a one-to-4 return? Well, of course, you want to leverage your return. The more certain you are of being right, the more confident you are of being right, you might want to leverage more. Now, that's another story, how to leverage in a safe way, but we're just talking about getting it right. And this is how you turn, $1,200 into $13,000 in just a couple of weeks, which is what they did, and more. So what the next stage was, well, hang on a second, do I have an anomaly here, or is it a phenomenon? Because if it's an anomaly, like so many trading systems are, then anomalies come and go, but a phenomenon will be around. And this phenomenon is all about the age-old one of demand and supply, because we're just looking at demand and supply at the leverage level, at the more intelligent level. It's logical to assume that leverage comes with potentially a little better information. It's a logical thing. So it's, again, the insight number 8 is that the OVI is measuring the demand and supply of leveraged professional money. And this is the hidden why behind the scenes that will massively enhance our chances of a pattern actually meaning something and working. This is the entire basis of what I do, and I only do pretty much I stick to one central theme. Now, where did that lead me to? It led me to best-selling books. It led me to servicing the International Securities Exchange and all these other things. And also people like Abe, whose life was transformed by using these kind of techniques. It led to New York Stock Exchange, International Securities Exchange hiring my applications, or getting me to do data analysis. And it's also led to this one trading plan template that I use for any strategy. It doesn't matter what strategy I'm doing, these components have to be fulfilled. And if you do this, you'll not get too far wrong. Even, dare I say it, if you just did these parts here, that would make a huge difference to your trading. What would make it even better forever is this thing as well. So this is the Edge trading plan. Now we can start to look very soon at the specific earnings strategy that we're going to teach you. So it's a complete trading system. We talked about the training, what are we training you in, the 4-step trading plan. We've covered that now. But what are we actually doing? Well, the thing is, that trading plan is one for all strategies, all tactics, and earnings, post-earnings, what I'm about to teach you, is just one tactic. So here we are, ready to go. Give me a wave of hands to say you're ready, willing, and able to hear about this. All right, post-earnings strategy. Earnings must be within the last 30 traded days. Write this down. Earnings must be within the last 30 traded days. So that's going to give you plenty of scope, because earnings last for a month, right? So that's another month you got there, from the first day to the last day of earnings, give or take. There must be a post-earnings bump, up or down, but let's focus on the bullish at this moment in time. There must be a post-earnings gap up or bump. Then there must also be a persistent OVI with a consolidation. So the way it would look would be stocks going like this, and then bang, up it goes, and then sideways. Okay, with, at the same time, persistent blue OVI, particularly during the consolidation. Just give me a wave if that makes sense. Very simple setup. I've told you the logic behind the whole setup, the way the institutions work, the way that they pour money into a stock that's maybe getting noticed when the earnings go, because what we're hoping for, because this isn't the end of it, the next stage of this would be, well, how do we actually take advantage of this? We can take advantage of it only on a breakout, only on a confirmation that this is, yes, this looks like it's happening, supported by all this leverage. So I'll tell you that in a minute. That's just the setup. How do I find it? Well, I find it with a very simple piece of software that finds the earnings in the last 20 or 30 traded days. There's been a gap up here. That's one filter. Here's 2 filters, and a persistent OVI as well. Those are my filters. I only need 2 or 3 filters to make this happen. Gap up, earnings, and then persistent OVI, persistent positive OVI, because it'd be positive or negative. And that's how easy it is. The results come up in seconds, and here's the steps. So you've got the criteria. Here are now the steps. The criteria must be met. Okay, that's the first thing. Once we've got the criteria made, there must be a breakout. You only trade the breakout. You can set this up in advance with a buy stop limit order or a conditional order on the options if you want to do it that way. That's your entry part, trading the breakout. Managing the trade by protecting your profits, I call that P1, and playing for the windfall, P2, that's your defending your profits, and that's your growing to windfall bits. And then, of course, the criteria being met is your evidence bit, the OVI and the setup that's been tested over and over again and independently. Just give me a wave if that makes sense. We'll go and have a look at some trades. Teresa, options volatility indicator. That's what it means. It's proprietary to me. All right, so wave if that makes sense. Very logical. You repeat over and over and over again until it becomes just part of you. So let me show you a few examples, past and present, okay? And then we'll have some fun. All right, here's Apple. Do we agree? And get the waving going, guys. Let's get some energy up here because this is fun. I'm telling you, this is a life-changing thing, and it's amazing. So here we go. Here we go, going to get my thing going. There we go. Earnings is here, end of January. Is this a gap up? Just keep waving at me when you want to. Is there a gap up? Yes. Is there a sideways move? Yes. Is there a persistent OVI? Yes. Is there a breakout? Yes. Did it keep going? Yes. So in this particular case, Apple made a 19% move. This is a poster chart. This is so easy. And it was a double money on the options. Remember, look at all these guys. They are not playing for 19%. They're playing for way bigger stakes. Okay, that's $2,000 into $4,500. Here's MuleSoft last year, really good one to give you because this happens quite a lot. It actually just happened with, which one was it? Just trying to remember one, and we've just had another takeover right now on one of these, but very similar. You have earnings here in mid-February, gap up earnings, sideways move, then you get the breakout after about 2 weeks. Are the criteria filled? Just give me a wave. Are these criteria filled? Gap up, sideways move, persistent positive OVI supporting the fact that there might be another up, there is another move up, and then eventually there's a takeover by Salesforce as well. Move in MuleSoft, 126% on the options. That seems a little low. It must have been very, very deep in the money. But $2,500 into $5,500. We're going to give you some recent ones as well. Does it work the other way? It sure does. This is LB Brands again last year. Here was a gap down, sideways move, persistent negative OVI, and now it's post earnings and it drifts down. The post earnings drift is a real phenomenon, but your probabilities of getting it right are far enhanced by having a supporting persistent OVI in that direction and a breakout and the trading plan that I give you. That's going to massively enhance your probabilities. Okay, so that's LB, 23% move down, 88% on the options side of things. You see how it works. $2,700 into $5,000. Here's PCYC, one of my favorites of all time. This is just one that we just loved in our mentorship groups. But here's earnings, here's the gap up, here's the sideways move, here's the persistent OVI post earnings, here's the first breakout, goes sideways again, and there's the second one, and away we go. But buy now, buy here, we're already in a no risk situation, in a no loss situation. So we get a second bite at this. 63% move up, meaning a 4.5 bagger on that one. So $2,800 goes to $12,740. Advanced Micro Devices last year happened twice. This was beautiful, again in my mentorship groups. Earnings here in April, gap up. It's a bit more, it looks small because we're looking at the whole chart here. Gap up followed by persistent, nice positive OVI, and then the breakout. That one there, and then in July, August earnings, we had that one as well. Gap up, sideways move for about a month, but you kind of knew that it had every chance, and eventually it does break out. Again, buy stop limit orders or conditional orders can help you with that one. 43% was the first move up before it gets stopped out, meaning 3-bagger on the way up. And on the second one, so that's $2,000 into $6,500, quite useful. This one here, the July one, was a 58% move up before being stopped out here in October. 58% move, meaning a 3-bagger there as well. Now, this whole move was actually a 3-bagger and a 10-bagger in terms of the option. So threefold up from here, the first one in April all the way to October, if you'd been in for that whole shout, or with options deep in the money, tenfold on that one. So $2,000 into $6,000 again. Now, this is one just recently. So UMP was recently. Now let's have a look and see what the deal is in this one. Well, here we actually had a pre-earnings gap up on this one. So we're having some news comes out here before earnings, and we've got another pop up here. Then it goes sideways, and then we get the breakout. Again, the OVI is persistently positive, and it drifts upwards. Now, which options are you going to take? If you're going to take it deep in the money, I'm going for the May 145s, nothing aggressive with that, but even that has been a 50% move. I'll show you on that one. 5% move up on the stock. It's only been up for about 2 weeks, so potentially more to come potentially on that one. 5.5%, but the options are up 50%. So that's just a function of the way that those options are working, in particular on UMP. So $1,820 if you're looking at the 1820s on that one for May, deep in the money, going to 2.5 or $2,700. Very easy trade. I mean, look, you never were in a loss. Once it was breaking out, you were in and clear on profit. Here's SYF, another one. Now, just look again. Just give me a wave on this one, guys. I want you to just give me waves. If you see the setup, look at the setup that I'm looking at here. Earnings, persistent OVI, before and afterwards, by the way, because I always have a pre-earnings strategy. I'll talk about that in a minute. Gap up at earnings, sideways move, right on the 200-day moving average, by the way. How helpful is that? And then breakout. Now, that one there in the stock, only in the last few days, there's a 4% move up, and you think 4%, okay. But on the deep in the money options, that's already 28%. The story isn't written on this one yet. You're already into a secured profit here with the trading plan. That's already banked profits on part of those trades, on part of those contracts. 1,750 goes to $4,500. Here's XLNX, another one. Again, just look at what we're looking for here. A gap up at earnings with a subsequent consolidation, and then you get in on the pop up from there. Is there a decent OVI? Yes, there is. And then we take that one. In fact, you can even take the second one, little flags there. So this one here is now an 11% move in the stock and a 37. Actually, I think it's more than that. But anyway, even if it's only 37%, still pretty darn good for 2 weeks worth of not doing very much. 1,870 to $2,500. Here's Navi. I show you this for a very good reason, because this one did a couple of things. It's not all easy. Oh, Rosa's saying, what's the delta? At least 70 deltas on that, and 3 to 6 months is a preference, because if you've got 85 deltas, then time's kind of out the equation. But we'll come to that at the end of the Q&As, because that's another options layer that I put on top. But you get the basic setups right, you're doing really well. Now look at this stock here. Let me show you something here. This persistent negative OVI correlating very nice with a downtrend. This is now positive OVI correlating beautifully with an uptrend. Here is your gap up at earnings, your pop up at earnings. Here is your consolidation, and here is your big move very quickly. Now, what's interesting about this one, because I don't want to show you just all the easy, great opportunities here. This was great until this bar here, right? But what is rule number 2 in the edge trading system? EDGE. What is it? It's defend. You can defend your profits. Now, it gapped down. Now, it's not going to take you into a loss in any case. You're already well in profit. But buy here. You're already going to make sure that this profit can't turn into a loss. Yes or no? Just give me a wave on that one. Even with that little gap down, which didn't take us out of the trade anyway, but even with that, you've already either taken some profit off the table or you've raised your stop using my D part of the edge plan. So, this is life, but if you trade it right, don't get greedy, don't think you can predict, because you can't, not even with this stuff on your side, but this stuff massively enhances your predictability, your profitability and your chances of making money, then you've got a great chance because you stand again. This is an 11% move, and it was a 76% move on those options. Why wouldn't you take a little bit off the table at that point? It would be mad not to. Okay, so $1,700 into $3,000 in just a few days. Let's have a look. 1, 2, 3, 4, 5 days that took to make 76%. Of course, take a few contracts off, get yourself into a no-risk position. Here was eBay. Remember we talked about opinion earlier on, talked about eBay, and I said, look, surely eBay must be going down because Amazon must have encroached on their business. Well, that's not what the market's saying. So don't let opinion get in your way. Here's a gap up at earnings. Here's a consolidation. And here's a breakout. And here's the persistent positive OVI with that. And with that, here is, and I thought it was great, here's an 8.9% move up on the stock and 48% move up on the deep in the money options.
Hey, Guy, I don't mean to interrupt. I will be needing to head out in the next 5 or so minutes. I have prior engagements. Cool.
Oh, crikey. Okay. $1,600 into $2,400. Okay, so and then there's Hilton. You got the same kind of deal here. Now, this was a pre-earnings situation. Pre-earnings. Look at what the leverage people are thinking pre-earnings. Look at that. Okay, and what happened at earnings? That's a different strategy. This is the pre-earnings strategy. So it's 113% on those options, a double money thing. And we've got it here again with STI. Right before earnings, the OVI pops up. Now look at the difference. This is what the leverage players are telling you if you know what they're doing. Down move there, negative OVI, and oh, hang on, we're now positive on this before earnings, and boom. That's what happens at earnings. So you get the picture here, how powerful this can be. Here's SYF. Again, I showed you the post-earnings situation, which was this one before. But what about pre-earnings? Look at what happened. It suddenly started going positive, and then it popped before earnings even, and during earnings. These guys must have known what was going to happen because beforehand, they were pretty well advised on that one too. Just give me a wave if that makes sense. If you can see the difference of sentiment by leverage players, and they got it right. So it all looks easy, and the closer you stick to my rules, it will be easy. And you've got to be patient, and you got to only stick to the optimal opportunities. But if you trade like this, you are going to have a lot of fun. You're going to be looking forward to earnings sessions, and this is what happens. You come back to me and you say, I just made 8,600 in 2 days, and that kind of thing. Remember Kyle, remember Chloe, and these guys as well. There's Abe and Kate and Roger again, and Kedzie and Ryan and Sheldon as well, all making big money. Now, I talked about the trading system. I talked about the trading plan, the tactics. Well, what about these last two? I will tell you about those in a minute. I do have an offer for you tonight. It's my OVI earnings package. It's the filters for stocks. You get the actual software that finds these applications post earnings and the video tutorials step by step as well. But I'm also going to throw in the pre-earnings strategies as well. You just saw, so the pre-earnings filter software and the step-by-step tutorials, and also the 4-step trading plan, EDGE, in detail, and unlimited support, which I believe in very strongly. When would you start? You'd start now, because there's still time, even now, to implement the post-earnings windfall strategy. Because we're in post-earnings right now, there are still opportunities happening. I've told you about the empirical basis of this and the proof and the extraordinary success we've got from people, both not only on the discretionary side, but also on the automated side. There is nothing else like this. Now, the big difference between what you get with me and elsewhere is that elsewhere you get non-properly tested systems laced with confirmation bias. I create properly tested systems, independently tested to institutional standards. That's because we're raising our own fund, and most of the other ones can't be transferred because they're just down to one individual's experience and expertise. You can't get into their head. My systems are transferable from me to me, but also from me to you, and then customizable for you as an individual and tailored to your own needs as well. Most systems can't be reliably repeated because they're due to anomalies and overfitting. Mine are repeatable, they're robust, they're proven over time, over many metrics, and independent. Now, here's another thing that gets me wound up, is people jumping from one thing to another. 1 minute they're bonds, 1 minute they're crypto, 1 minute they're stocks. Well, I've only done stocks and stock options ever. That's all I've ever done because there's a viable edge with it. I've been consistent with that. I keep on improving that. That's how you're going to make money. That's how people make money in life, by specializing. And this is how what happens when you specialize, you get to make the big profits like Vinny did here, 34,000 on Apple, and Steve 53,000 on this was back in LinkedIn, and David 300%. you see it. This is how someone gets 29. It ended up being winning trades verified in a row with my earnings strategies. So it's not for people who want to get rich with zero effort, because there is a little bit of effort here. If you don't have 30 minutes 3 times a week, don't bother. If you like stare at your screens all day, not really for us. If you can't follow simple rules like I've just shown you, please don't. And if you prefer to trade through gut feel and opinions, that's not it. But if you do want a reliable, safe, exciting, cool way to make money, proven way, and keep to the rules. If other strategies aren't necessarily working well for you, or you might be inexperienced, you want to know where to start, this is a great thing, and you've committed to proving certain rules. I'm looking for my next protege. It could be you, and it's going to be affordable for anyone watching. So the last 2 pieces of the puzzle, the training, the trading plan, the tactics, is the tools. The tools, my TradeFinder software, does the hard work for you, literally in a couple of clicks, proven, simple, repeatable. And the last one is just a little bit of time to practice. You're not going to become a surgeon in 5 minutes. You need a bit of time. Invest in yourself, invest in this for that. And then what you have, part of what we give you is a cheat sheet, a trading plan cheat sheet. The trading plan moves forwards. What are you going to do? What are you doing? And the journal then looks back and says, what did you do? But they must be quick. They must be easy to do. Otherwise, you wouldn't bother doing them. So we make it quick and we make it easy for you to do. Empirical evidence, I've shown you that one. Lots and lots and lots of testimonials of people making loads of money. When I look at Kim, he's talking about no stress. He's not chasing trades anymore, void of stress, and he's making really good money. Again, average profit per trade was 68% on his options. He only trades a small amount in any case, but it's made a big difference to him. It's made the crucial difference being it's bigger than his social security check as well, which is pretty amazing. And this was 2 systems he traded at the same time. It wasn't even different market conditions. One makes a profit with an 82% win rate. One makes a loss with a 30% win rate at the same time. This, of course, is the OVI method that he was trading. Here's Chloe. Chloe's actually now joined our team. She's really, really smart and is now on, but this is after this email, is now on a 3.5 times her account. So what do you prefer? Do you want a system that's loaded in your favor or not loaded in your favor? Well, I suspect you want one that is. Could be the best choice you ever make, says Toby, and Harry's again another 7 out of 10. Douglas is 7 out of 10, and so much. So here's what I have for you tonight, and I will be as quick as I can. Sorry, we're running a little bit over. Post-earnings TradeFinder filter software for stocks and the step-by-step video tutorial. So you can go through this nice and slow and repeat it over and over again. But also the pre-earnings I'm going to add, because pre-earnings can be a lot of fun. It's a bit of a specialized thing, but it's good fun too. Again, the trade finders and the tutorial step-by-step. Then there's the 4-step edge system in detail and unlimited support, which is hugely important. Now, the investment today is not going to be 57,000 for the MBA, or like I paid. It's not going to be the 18,000 that Kyle made or the 3-bagger that Chloe has made. It's not even going to be 1997. It could be 1497, but there is a special thing I'm going to add to you. Here is the link. It's oviearnings.com. I'm going to put it in the chat box, by the way, as well, if I can. If I do that, actually, I'll just do that again, because I think I did it wrong. If I send it to everybody, I think I can send it to everybody. Here's the link, oviearnings.com/TT. If you don't do TT, you won't get the discount on it. So there are a few bonuses, which I'll go on to, and then one special thing at the very end. So we're in the last few minutes here. Bonus 1 is a group onboarding session that I'll be doing on Tuesday for the first 30 applicants in this. So value at 597. That'll be on Tuesday. I'm going to onboard you personally onto this. You also get my earnings calendar, so you know exactly when earnings is. That's the easy bit, but exactly when the strategies become active, that's a little bit more involved. I'll give you that one too. If you're not in it, you can't win it. It could cost you a lot of money not to have that. So you have the mastery package here at $14.97, and you have the live strategy session with me for free and the earnings calendar with me for free. The third bonus is the options earnings filters. This is hugely important. So you don't just get the stock filters, you can search for the right options as well. And I'll teach you how to do that too. So you can get the right deep in the money options, value of 1997, and I'm going to give you that for free as well. The fourth bonus is I'm going to give you full access to my Option Easy website, to video tutorials and advanced tools, calculators, leverage multiple calculators, the Option Easy pricer, so you know what an option is going to be valued in the future when you're going to be ready to get into it. Value 997. There's amazing stuff here. There's so much in it, really cool stuff, and I'm going to put that in as well as a bonus for free. The other one is this big one, a one-to-one session for the first 10 applicants. So you want to get a move on this one. There's plenty of people in the room here. This is a tailored one-to-one session with a handpicked OVI training coach who is trained by me. Now, with what happens is remember I told you at the very beginning that trading is an individual journey. Now, you are going to learn a system, but still you have to adapt to that system yourself, and that system we can adapt for you as well. So this can be a personalized trading assessment, guidance on which strategy to focus on. That will be post earnings, and any questions you want to ask. This is hugely valuable. This session alone was the thing that turned it for Chloe and made her triple her account in just a few months. So we're putting the live mastery package together, the mastery OVI earnings package, the live strategy session with me on Tuesday, the earnings calendar for free, the options for earnings, so you filter not just for stocks but for the individual options as well. That's for free. Bonus number 4 is the tutorials and tools in the Option Easy website for free, and one-to-one coaching session for the first 10, 997 value for free. That gives you a total value of 6282 at least, because you can't even get anything like the OVI in any other place, all at 1497. But I'll give, for these reasons of having been persuaded by the TradeThirsty guys, it's available tonight with this link only for 997. If you don't put the /TT in, it will be double. So don't avoid that. So do make sure you put that /TT. So www.oviearnings.com/TT. And there's total of 30 spots available with 10 for that one-to-one coaching session. Please just do it now. I'll just do a quick run through of Q&As and then I'll wrap up, and so Hubert can get going. When you click on that link, you'll get a page like this. Fill in your details and proceed, and you'll get that link, and it will look a little bit like this, and you'll get it at 997. If you put the wrong link in, it'll say 1997. So make sure you get that /TT in there. I do want to answer your questions as well. You want to be like Kim and Chloe. I'm going to move forward a bit because there are a few questions in here as well. Let's have a look. There's a lot of good questions in here, which I don't know whether we'll have time, but we could potentially have these forwarded to me. But how many weeks of the year can you trade OVI earning strategies? You'd be surprised. It is 40 weeks of the year you can do the post-earning strategy alone. 26 for the pre-earnings. They do overlap a little bit. So 48 weeks of the year you could be focusing on this strategy. Phenomenal. On these strategies. Which software? There is no software to install. It's all done online on my website. What are the data fees? There are no data fees. We all include all of that into the price. When will you get everything? Immediately. Just make sure you put us in your safe senders list. Just make sure that it hasn't gone into your junk folder, so you get it all sorted. How will you be supported by my team? In that one. I know someone's saying that TR is saying how do you do it? Well, you've got to do it with the software, TR, on that one. But how will you be supported by my dedicated support team? That means me and Glenn in terms of the mentorships. We've got a full IT team behind us and a support team that provides really very dedicated. We care about your success. It's really important for us that you do. So we've got all these people to help to it. We've got a couple more people in support now as well. It is an annual payment, SG, for you. What if you don't qualify for the special deal? Well, you should do, because if you get on today and now, then you will, but only a few can, of course. Do I trade these strategies with stocks or options? It is both. You can do it with stocks and options, and by learning with me, you'll learn how to trade the safest options. As I said, I talked about deep in the money earlier on. Now, what you've learned so far, what platform do we use? You can use any platform you like. You can use TradeStation, you can use Interactive Brokers. What we like, though, is a broker who can satisfy our ability to put the whole order in advance. So what I want is a conditional order on the way in, but I also want my bracketed orders to be conditional orders as well. The reason we do deep in the money options is so we don't have to worry about time decay or implied volatility. And therefore, if you're going to do this with options, you do it with deep in the money options, and then the stock price is the only thing that really matters at that point, because the intrinsic value at the very least will take care of most of the other options complexity for you in that base. So we don't want to get mucked about by that, and we do everything conditional on the underlying stock price if you're going to do options. But that's another tutorial, if you like. Now, David has said, what's the recurring charge after 9 and 7? Once you get into this, you are grandfathered in. So if you choose to continue, which most people do, then you're grandfathered in at that half price as well. So that's another great reason for getting in today. It is normally available at 1997. You will see that if you don't put the /TT in. So you're getting in at that, and it's grandfathered in. I mentioned 4 patterns. I only give 2 patterns. Do you sell the other 2? Right. So Rosa, I didn't include the straddles. That is an entirely different strategy. That one, it is different. We do it differently to other people as well in that situation. The other 2 strategies, I mentioned the post earnings, which we specialized in. We talk about pre-earnings. I gave you a little snippet of that. I would have done it. It's actually in my slides. We don't have time to go through that right now. But pre-earnings is a delicacy, if I can put it that way, because if you trade pre-earnings, you want to be doing it with a very small part of your account, even though we have a very robust and very good system. And if you've looked at this pre-earnings, you would have seen so many great setups before, and you have a nibble at those, it would have been very lucrative for you, extremely. But of course, if you're going to trade pre-earnings, there is additional risk, and so you have to manage that accordingly. Next. I think I mentioned 3 setups, not 4, Rosa, on that one, just to correct. I want to have a look here. Let's see, how out are you with the average? Okay, Bars asked there. So the options questions are, we go 3 to 6 months out, wherever we can get a decent amount of open interest and liquidity with them, because obviously when you go further deep in the money, you are going to have liquidity potential and liquidity challenges. So you have to be very careful about that. But the point, and by the way, there is another option strategy which has no liquidity issues as well, but that's a very advanced strategy, and I can take time out of the equation. But that's a slightly veering into something a little bit different if I go into that. But it's very, very cool how you can do that with options if you know what you're doing and if you've got the account set up in the right way. But the key is to get the fundamental setup right. Then it doesn't really matter how you do the rest of it. But don't go at the money. Whatever you do not go at the money. It is tested. It is not as effective. It is more risky. Because if nothing happens with an at the money situation, then you'll lose money. You'll lose, and you won't have any control over the way you lose it, because you're not in control of how implied volatility is going to work as well. So many things I could answer. What else is required with your OVI software? Is the data, use it for free? TR, yes, all free. It's all there. You use our system, our charts, our trade finders, and then you implement it with your brokerage account. Recurring charges would be the same. It's half price, grandfathered. If you continue on the grandfather rate. Works on which platforms? Any platform, David. But you use our software, and we're actually going to mobile optimized during the course of this next few months. So you could even do it, from your mobile in the next few months. And you use your brokerage platform. Do I own the OVI to install? No. Tell you what. So Ricardo, you said about, can you put the OVI in your own charting platform? We are just about to install it into Metastock. I am sure that others will follow in due course, but we're just putting it into Metastock soon. If you have the membership there, I mean, obviously it's for OVI members only. Let's have a look. TR is back. Which magic button is pushed that scans all the options to show the OVI advantage? How does a person find the earnings on their own? Yes, TR. Just give me a wave, TR. I can see you there, and you're asking some great questions. I appreciate that very much. Just give me a wave if I call out your name. TR has said that. Yes, the software, you basically have the parameters set, and you literally say, yes, I want a persistent OVI. I want, I'm looking for the post earnings setup, and you press literally a couple of buttons and it will come up with the post earnings gap ups. If you've chosen gap up rather than gap down, if you've chosen persistent positive OVI rather than persistent negative OVI, it's really that simple. And then those opportunities will be presented to you, and then there is some education, as I said, in the video courseware, and that education will be able to enable you how to determine one against another, or say, look, I'm going to I've only got room for 3 trades here. These are the best ones out of, if let's say that 10 popped up, 10 really nice ones popped up. You'll see through the education I give you in the videos as well. That's the whole point. This is not just a done for you thing. This is giving you some fish, but also teaching you how to make the best of that fishing itself, giving you the rod to do that. I want to take care of every question I can get here, but I'm not necessarily in control of that. All right, Len asks,
start out here,
guy. have I pushed my luck here?
I do believe so. I'm sorry, I do have plans. I need to get out of here 20 minutes ago. Sorry.
I appreciate it very much. No, I took advantage of being the last person, but I do appreciate that. Anyway, guys, if you want anything, just get in touch. oviearnings.com/TT. Or just write into support if you want any further information. But thank you very much for this. I enjoyed it. I love talking about this stuff. I have a ton of enthusiasm for it. We are very serious about the way we test things and do things. We do things a little differently, as I'm sure you saw. But thank you very much. Hope you enjoy the rest of your weekend. Bye for now.